Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was scrolling through the comments. One of the comments was, uh, when do we sell? What does it look like? How do you know? And when do you take profits? And it's very difficult to pick tops. It is very, very difficult. But there's a couple things I want to go over where we could identify tops or get at least a general area. I don't think anyone's going to get it perfect. So just like you're not going to get it perfect buying, we cost average in. A good strategy could be to cost average out. So it's not just guessing or trying to get one peak little moment and then unloading everything. But it's possible that you could do that, but it's very unlikely that you'll get the peak of the peak. So just know that. Know that it is very difficult to sell at a perfect top, and that no one's more than likely, hardly anyone's going to do it. But there are some indications that we are getting expensive and that a top could potentially be coming. And I'm going to cover some of this. So behind me, and I'll get out of here. Behind me is how many pounds of uranium can 1 ounce buy of gold. This is a ratio. This is what we use for value. And one of the things that you can look at is this ratio against gold. Gold is an accounting mechanism for the money supply, basically. It accounts for it under inflationary periods, usually under an expansionary phase of real estate, because that's where the inflation starts coming into the system. We do have inflation. I think we are going to get a revaluation of gold higher. And usually when you have inflation, you have increasing interest rates and a whole bunch of stuff comes along with it. But looking at this ratio, this tells us relative value against gold. It tells us what the value of uranium is, inflation adjusted. That's really all it says. Now, when we start going from undervalued land, and we're at 48.5 right now, we are sucking the valuation out of this ratio right now. We were up above 60 at one point. That's when I was going crazy, like, we got to buy, we got to get in, we got to, I got to get in. Again, this is not financial advice. It's just, I talk in that type of way just because I consider us as a community, so I say we, but it's me looking at this stuff and me sharing my opinion. So I was very aggressive when it was up in this range here, and the charts were very good looking for bottoming patterns. But when this ratio gets its value sucked out, it most likely will come all the way down and match previous cycles. So when this ratio is coming on down and it bottoms and breaks its downtrend and breaks the downtrend here, then we should be looking at potentially exiting, because the valuation of uranium is fully valued or overvalued, however you want to say that. And the momentum in the ratio is changing and turning, which usually means that uranium is putting in a peak. So that's one indication, is the ratio coming all the way down and bottoming and turning around. That is one valuation metric to say, look, uranium's expensive relative to gold. It's probably going to turn around very soon. And we wait for the downtrend line break. Other things that we can do. I've got SM Energy up here, and I know it's not related to uranium, but when looking at a uranium top, there's a specific chart pattern that we can look for to help us better identify where we are in the cycle for a move higher and then for a pullback consolidation period. This one has scribed out what I consider to be almost a perfect pattern. We were coming on up, we did this jiggly stuff, comes on down, comes up, pulls back, comes all the way to the tip. This here, from 97 to 2014-15, is one complete cycle. And you can see it clear as day here. And this is the pullback that almost all of them experience. So you have to look at where we are in this cycle. And where we are in this cycle is right here. We're right around this point here, because we did the sideways movement we popped up and over, we came up a little, and then we dropped down. It wasn't as dramatic as this because this was the 2008 crash. The 2008 crash just amplified this move. It amplified the downward move, but the actual pattern is still there and it was still going to go higher. So if we can identify where we are in the pattern, we should have a better indication of where the top could potentially be. Now, these patterns can also be skewed in all sorts of directions. This can be skewed where this peaks and then this top comes down here, or the top can come up here. So it's difficult to know the exact top, and it's the ratios would also be throwing potential sell signals at some point. It would throw a sell signal here for oil. It came all the way back down, and then it quickly and ramped aggressively all the way back up to another sell signal. So it's difficult to get a top because the ratio could bounce at its overvalued level up and down for a little while. And the price could go rocketing downward and upward depending on external market conditions. Just like this 08 crash and then the massive move higher afterwards. This would have been a very difficult one to ride because I would have been selling out here. Would I have bought back? I don't know. This would have been a very difficult one to ride all the way up to here. Now here's another one. This is silver. Silver's got some crazy stuff going on. Now remember the pattern recognition that we have here. Let's see if we can recognize this pattern in this, and I haven't done this either. There's two things. So usually you get like this double hump, and we've got, here's the 08 move downward. So this pattern looks a little bit different. We're coming on up. We've got a gold to silver ratio. This move here is pretty common before a launch higher. We're putting in this, we're right here in this move, this little arm in oil right now. So we've gone through some of this, and we're right here for oil. We're right here for uranium. We're right here for copper. We're right here for rare earth metals and solar, in my opinion. And that's like right in here, or where this little arm is right here, right there. That's where we're at. We're right before a big move, I think. And I could be wrong, but that's kind of where we're at, I think. Now we got this huge move higher, and usually at tops, what you see, and silver did this, you can't really see it on this. I was trying to find a chart that had it. It trades all the way up and leaves a gigantic wick at the top. A wick means that throughout the day or week, it traded and it reversed very hard at some point. So throughout the day, it came up, reversed, and came all the way back down. A huge reversal point at the top where you've got people flooding into the stock or equity or whatever it is, and it reverses one day extremely hard, and it leaves a gigantic wick at the top. That is another indication that we could potentially be topping, most likely. And then you've got the pattern recognition behind it. You could write it down and then write it back up and sell it here because it's a lower high and whatnot. But again, it is a difficult business to be calling tops. And you might not get it. You could be wrong. I've been waiting for the technology stocks and S&P 500 to be topping. And I've been looking at indications of that kind of rolling over. I've been looking for it. And what we're looking for also are patterns. Patterns where things are coming up like an ascending wedge pattern. A pattern that within buying pressure and selling pressure, the candlesticks themselves, we could be looking at large down candlesticks and looking for bearish engulfings, bearish piercings, bearish candlestick patterns that are forming all over the place at the top. Big selling pressure, and then the buyers being very weak, putting in small candlesticks, just barely pushing it higher. And then it gets punched lower, barely coming up higher. It's struggling to go up, and we're seeing large down candlestick selling pressure at the top. That's another kind of slow rolling top deal. But I also think that the top in uranium is probably going to be a good ways away. We have a lot of valuation, a lot of runway in front of us where this could go much higher. So if you guys are interested in this stuff, click subscribe, join the channel. I'll go over all this stuff. We'll do the daily technical analysis on a lot of these things. Another thing, look for confluence. Confluence means that look at the oil sector, look at other sectors, see what they're doing. If everything looks like it's about to launch, then I would be holding on. And right now, uranium, copper, a lot of these energy stocks like oil and natural gas, a lot of the mining stuff looks pretty good to launch higher. I think we are at the beginning of a very big move for all of them. That's my interpretation of the charts. That's definitely my stance on valuation. And the runway in front of us in terms of valuation is massive. We can soak up so much movement because the value is so undervalued right now. And why I am so excited about commodities in general is because we're at 100-year lows. This can go a super long way to the upside. And I think it's going to take some years to fully value the move, to go from an undervalued state to an overvalued state. So we've got a lot of runway ahead of us. And I think we're going to have a hopefully an easy ride higher. Hopefully it's very nice and calm and it just continues to move on up. It's difficult and hard on people emotionally and seeing their accounts go up and down, especially if you have very large gains. What's difficult is if you have a smaller account, and there's nothing against smaller accounts or bigger accounts. I'm just letting you know that you have to prepare yourself mentally here. When we go into and you start gaining a lot of we'll call it wealth, or your positions start getting bigger and bigger, you're going to be used to fluctuations. Let's say you've got a $10,000 or $20,000 account. You're used to like a couple $100 fluctuations. At the end of this market, if you are strong enough holder and you're holding through this valuation, your account may be going up tens of thousands, $20,000 up and down days or more. If you can hold on, you're going to have to prepare yourself mentally for that. I know a lot of people think that, oh, my account's down or something, like if you originally buy. The further you go into the future and when this valuation, the runway of value gets eaten up, your account's going to get much larger, much, much larger. And you're going to have to be mentally prepared to take huge volatility in some of these as we're going up. And sometimes you're going to look at the account, and I'm going to throw out numbers here. The account's at 300,000 and it goes down to 200,000. You just lost $100,000. But if you keep riding it higher and you know the valuations, the pattern's still there, everything looks good, maybe we can go from 200 to 600 in a half a year. I mean, I'm throwing out big numbers here, for most people. And you have to be mentally prepared to ride through that. You have to be prepared to take those types of swings. Otherwise, you're not going to get the fruit at the end. It's all going to be done for nothing, a small little gain. I'm going for the big gain, and it takes experience, it takes wisdom, it takes all of these things combined on the channel to get there. And you know what? I'm going to mess up on the way too. I haven't seen too many of these tops. Just like everyone else, you don't have that many in your life. And it's very difficult to take full advantage of this entire commodity bull market. So my strategy is look at the valuations and the ratios, look at charts, look at confluence, look at to see what other sectors are doing, look at real estate. If real estate's peaking out, you're probably going to have a crash soon. If we're rolling over, and that's going to take everything down. That's a deflationary bust. So if you guys want my opinion, subscribe to the channel, leave comments, ask questions. I'll tell you what I think. And then, look at other channels. Maybe they've got other stuff that can help you out as well. But I take this stuff pretty serious. I think once I get to a certain level, maybe I'll do this full time. The level being how much money I have in my accounts. Maybe not. Maybe I'll continue to work. We'll see. But I have a feeling that things are going to take off quite rapidly in some of these sectors. And you better be prepared. You gotta come to the channel, ask questions. I'll answer your questions through videos. Everyone can watch it. Doesn't mean I know all the answers, but you can get my opinion on it. And we can bounce ideas off each other. That's what the value of this channel is. Why I've created it. It's here to help each other ride this thing higher. And hopefully this channel is providing that value to you where it gives you confidence. It gives you things to look at. I've seen a lot of people on the channel who've been on the channel for a while. They're asking really good questions, and they must be listening to what I've had to offer because the questions you're asking are super intelligent questions. You're asking things about valuations. You're asking about how things look like when they turn. What do the pattern mean? All those things. So hopefully we can ride this higher, and hopefully it turns out to benefit the most that's on the channel here. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.